Welcome to Investors Insights. Our topic today is Investors Wish List. We're going over some information today, and we're hoping that our wish list is heard by Mr. Market. And to discuss that with me, I have my distinguished colleagues, Bobby Norman, Ty Miller, and Trey Booth with me to go over those topics. I also want to say that on Wednesday, this coming Wednesday, October 19th, at high noon Central Time, 12 Central Time or 1 Eastern Time, we're going to have an Investors Insights Q&A to answer a lot of our clients' questions. We would love for each and every one of you to participate with us so that all our clients across the country can join in as the four of us answer questions regarding the volatility of this market, looking forward as we've just got less than 90 days before we're in 2023. And we're going to address some of the topics that we will also go into more detail on. We will address those today in brief form and then elaborate even more on Wednesday. So with that, Bobby, I'd like to start off with you. Investors wish list. People are saying, are corporate earnings going to continue to do well? What's the historical aspect of this type of midterm election year? Will history repeat itself? And then, of course, the thing that's hitting all of us is inflation. I need my portfolio to grow because inflation is costing a lot more to buy that case of beverages, Coca-Cola, as well as food and other things. So with that, Bobby, elaborate here.
Yeah, so as volatility remains high, we continue to look back at history of the market to see what could lie ahead as we get closer to the midterm election, which, as we've mentioned numerous times recently in the vlog, the market historically shows strength in the months after the midterm election. What we found out about the S&P 500 is when it's been down 25% or more, which we've highlighted yellow in this chart, is that first, the market is really down this much, only about 1.5% of the time. And the historical returns going back to 1950 have shown that the market has performed well in the following 3 months, 6 months, and the next full year. As always, no guarantees, and past performance is no guarantee of future results. But as volatile as the markets have been, it's important to point out that we've been here before. So we're watching carefully to see if history is any indicator for the next few months here. Also, after another choppy week in the markets, as you can see in this chart, the S&P 500 finished last week at 3583. So from a technical analysis standpoint, we would like to see the S&P 500 push through 3,800, which is near-term resistance and would help us get closer to the important 50-day moving average of 3933. Something we're watching very carefully this week.
Yeah, and that's fantastic data. Gives folks great insight in relation to where portfolios and markets have the opportunity to go if history does repeat itself. In addition to that, though, we're getting some interesting insight on inflation. That's a big topic for everybody. Every time I'm at a football tailgate or at other places, people are bringing up the fact that those hamburgers and hot dogs and everything else is costing a lot more money, as well as the gas to get there. So, Trey, talk about that in relation to the data that we're seeing now.
Yeah, absolutely. So in last Monday's blog, we pointed that inflation will be the most important data point that came out last week, and also how the markets reacted to that data would be important. And it definitely didn't disappoint. Those that were watching the stock market on Thursday when inflation came out was definitely not a dull moment. Inflation was expected to be 8%. It came in a little bit higher at 8.22%. And why that's important is we saw the market really sell off drastically in the morning. But to Bobby's point, we may be hitting an inflection because the market hit a low and then rallied, actually closed the day much higher. So we may be at an oversold point, and all this bad inflation data may be priced in. But if you look under the hood of the inflation, let me pull up this chart. You can see while the year-over-year average is 8.22%, the only two data points that go into inflation that are higher than average is the food and the transport. So that energy, the things you see when you're driving down to game day, to the tailgate, the things that people buy on a day-to-day basis, those while that's what they see and feel, that is the highest point. but the majority of goods and services are below average. So you see housing, which you don't buy every day, but it's actually below the average. Medical care, apparel, recreation, all these things that people spend money on, they just don't spend it on a day-to-day basis. They don't see inflation while they're driving down the interstate like you do the gas prices. Those items are actually lower, and so lower than average. So there's some hope that while it may not feel good on a day-to-day basis, as you go through time and life happens, and you may buy a new suit, which will fit into apparel, or go on vacation, which goes into recreation. Those prices aren't moving nearly at the same rate and are actually lower than the average inflation rate. So there could be some upside, and that may be what the market is seeing through there. Also, the other upside of it is interest rates moved drastically higher last week off this data point. Now, that is painful in the short term because higher interest rate bring prices of bonds down, but in the long term, you're able to get a high return for a very low cost in terms of risk. So right now, the 2-year Treasury yield is yielding almost 4.5%. This time last week, it was in the 4.2s. So a big move up in what is an extremely typically stable asset class. So some are watching closely to see how the market reacting. Definitely reacts to each tick, each data point. Inflation is hitting our clients on a day-to-day basis. We're seeing it in the plans, we're seeing it in their costs. However, the market reaction is really what we're watching for. See if there's any moves we need to make because of that.
Yeah, and so I think people will start noticing this, and also in relation to the volatility in the market, this inflation topic is the big topic. Interest rates. Where do we go from here? So you're absolutely right, Trey. And then Ty, one thing that definitely moves markets is earnings. All the things we've already talked about, history repeating itself. Where will interest rates go in inflation? But earnings, and what are you seeing out there?
Yeah, so earnings is usually a driving force for markets. Of course, we have some other factors, inflation, interest rates that Trey just hit on, but earnings is always a driving force in the market. So while we've seen earning estimates come down for the year, according to analysts and companies that report, it's not necessarily a bad thing. It's kind of a low bar that we're setting here. I expect an EPS growth below 8% now, for next year. However, earnings season just kicked off last week. We've seen about 10% of the companies report, and they're beating estimates at a 69% clip. That's not something that you see typically in a bad market, which is what we've had. But earnings are doing great, and we haven't even had any energy companies report yet. They're supposed to be leading the way above and beyond every other sector. So some positive light, a good start here for earnings season that can hopefully lead the market higher now that we have some lower expectations and hopefully a surprise to the upside.
You're absolutely right, Ty. And, we've got a lot of things taking place here with less than 90 days to year end in terms of midterm elections, more corporate earnings, as you've just talked about. So we're going to keep a close eye on all these data points and how they impact the financial blueprints and portfolios of our clients. We're going to keep you updated on all this information, as well as the details that move forward here as we go into 2023. And we're asking you to keep in touch through our social media, Facebook, LinkedIn, Twitter, YouTube. We have a podcast. We are very big on communicating with our clients. We want to do it one-on-one, over the phone, over a Zoom, but also from the standpoint, if you just want more and more information, we want you to know that Five Plan Partners will continue with this Portfolio Strategies group to provide you that kind of information in relation to your portfolio and your financial blueprint. We hope you have a great week. We're excited about some indicators we've talked about today. And yes, it is our investors' wish list, and we hope we're celebrating with you as we approach the end of this year. Take care. Have a great week.